A very good afternoon to everyone today, and thank you for having me here and giving IDC an opportunity to talk to you today. My name is Vinay Gupta, as the screen says. I'm Senior Research Director with IDC Asia Pacific, based out of Bangalore, and I track channels and ecosystems across Asia Pacific. Now, just by a raise of hand, how many of you are partners, resellers, dealers of technology segments which you sell in Thailand? Okay, very few. And how many of you are end users buying technologies? Okay. What are the rest of the people? You love SIS very much, right? That's why you are here. Good. No worries. One quick thing, and I noticed when I was going around today in the showcase, and because I'm from IDC, my job is to forecast market, and I can obviously say with confidence today that there is one thing which will definitely happen, and you'll hear about AI more than what you'll hear about coffee. More AI today, right? And a bit of my presentation today will also delve into that. Now, without further ado, let's move. Now, I've divided the entire presentation into 3 parts. The first part is essentially talking about what's happening globally, what's happening because of the geopolitical discussions which are happening, how is it impacting the overall market in Thailand, across the region, what are the different digital gaps which IDC research identifies across Thailand, and how can channel partners seize that opportunity and see how they can build their business around it, right? That's the first part. I'll also talk about which technology segments are seeing better investments throughout the region, as well as Thailand. And then I'll also talk about the device refresh cycle, which we've also heard in the morning today. And then some IDC recommendations for both the partners, the dealers and resellers who are here in the room today. Okay. Initially, or since last couple of years, we've never heard geopolitical scenarios coming into budget discussions. 2026 changed that. Because of the Middle Eastern situation, because of what's happening there, the businesses are getting affected. The CEOs, CXOs have their hands held tight on the budgets. And this is impacting how the deals are getting closed. The rate of those deals have gone down. It's taking more time for the end users to close those deals. However, my research will show you that it's not that the technology spending has stopped altogether. The spending is there, but there are pockets where that spending has concentrated. And my today's presentation will focus upon those pockets where you see enterprises spending their money. So essentially, the key takeaway from today's presentation would be for all the partners, dealers, resellers who are here to identify areas where you can offer your solutions and enterprises will have willingness to spend money on those solutions. Now, the war or the geopolitical situation impacts the IT budgets in 4 ways or in 4 stages. The first one is obviously the impact on energy shocks, the impact on the oil prices, the way supply chains are activating. That in turn impacts the consumer confidence within the countries, because the inflation goes high, oil prices rise up, consumers become stingy, they don't want to spend more. And I'm hoping that the translation which happens here is happening correct. Now, because the consumers are not spending so much, enterprises' bottom lines, their profits reduce, and obviously the CEOs and CXOs have a very hard time deciding upon what needs to be invested. So the IT budgets shrink. They do not vanish, they shrink. And hence, your deals take more time to materialize. There are areas which will see lesser traction. These are the areas where you see innovation gets into, counted. Money gets reduced there because these are the areas which are not tied clearly to the return on investments, to the paybacks which the enterprise would get. So the money shifts to areas where there is the operational resiliency which comes in. Productivity increases. So those are the areas, those are the themes which will see more IT spending or continued IT spending. Now let's filter down this entire scenario to Thailand. Thailand's macroeconomic situation is a bit soft. Bank of Thailand recently reduced the growth rate from, I think, 1.5% to around 1.3% of GDP growth. The numbers look small, but that's a huge reduction. And like I mentioned, the mood is a bit subtle. Not everyone is ready to buy technology at the pace they were buying earlier. The decisions come slow. However, if I look at the right side of my slides, Invest Bangkok has released numbers where they say there has been a tremendous amount of investments, close to 56 billion, which has come into Thailand, and a lot of that is into the digital space. Now, what does that mean? We also see, and I was listening to the presentations early in the morning today, Google, AWS, Microsoft, all of these vendors have started their cloud regions. And this means that there is investment, and this translates into pull-throughs, into investments into servers, storage, networking, power, backup, device refresh, so on and so forth. And like I said earlier, there are pockets of investments and areas in which the investment is still there, although it's not growing really fast. Now, let me trickle that down to the gaps, or essentially the areas where Thailand's enterprises see challenges. And I'll group them into 4 parts broadly. There are many blocks here, but I'll group them into 4 parts. The first and the biggest one is the skill and AI gap. Now, the enterprises clearly feel that they need to invest, they need to adopt the technology, but obviously, how do they start? Where do they start from is a big question. And this translates into an opportunity for the distributors, partners, resellers, because that opens up doors to running assessments, to setting up data cleansing practices, skilling sessions for the partners and dealers, right? The second one is obviously the AI piece, where the same challenges are available, skills, what technology to adopt, so on and so forth. The other one is from the sector side of things. Manufacturing sector, healthcare, financial sector, which includes banking, insurance, capital markets, retail, all of these sectors. And when I say sectors, I mean the enterprises which are operating within these sectors. they are modernizing themselves. They are investing money to modernize themselves, either because of government regulations or because of the competition which they are facing in the market. And that leads to an opportunity for the partners as well. They are lacking there. These enterprises are asking for help, and obviously partners are better suited to help them out. Now, when I say manufacturing, when I say banking, the key themes are definitely there, and I'll dig down into my presentation into those themes. And if you remember, I mentioned that there are challenges in the market. And this is a slide which I've picked up from the Black Book program of IDC, which talks about which technology segments are growing. If you see towards your extreme right, the total IT spending, close to 1.3 to 1.5%, the red bar in between, it indicates the total IT spend, including consumer. So consumer spending plus enterprise spending, that is what we are expecting. IDC is forecasting for 2026. But then obviously we are expecting the situation to improve next year. I'll not dig down into all of these numbers. I'm sure you are feeling the pressure everywhere. So I don't want to, bring that same pain here again. But there are two things which are very important to notice. The first, the geopolitical situation, the tariffs, the impact on the supply chain may impact this number further because there is a full year down the line. And the second thing is, if you look at the extreme left on the PC tablet front, we've seen a device refresh cycle because of the Windows 10 refresh cycle already happening in 2025. But then we expect that enterprises are still looking out for a lot of help in understanding what can be done further. And I'll cover that in a bit. But there is still an opportunity in the device refresh cycle. Although I wouldn't say that it's a boom market for devices, it has stabilized. But there are still opportunities there. And my entire presentation today focuses on the opportunities for the channel partner. Now, one of the growth areas which I can point out in this entire presentation is on the pull through which is happening because of AI, cloud, infrastructure, and obviously pull throughs happening in the software segment, the services segment, AI platforms on this, on the overall market side. Now, IDC does regular surveys of enterprises across the region, including Thailand. And one of the questions which we asked these enterprises was, which are your technology priorities for 2026, where you will invest in the market, invest in the technology? And the other question was, given the scenario, which technology segments do you think will get least impacted? What does this translate into? This translates into, for partners, for resellers, and the dealers here in the room, it translates into which are those technical segments or which are those technology areas where enterprises will still spend money. These are the top 5-6 areas which came out: security, hardware, software and services, cloud and infrastructure, AI platforms, analytics and business intelligence, and device management. Now, I remember when I was doing a similar session last year for a distributor in Thailand, device management was right on the top. That was the priority. This year, it has come down. AI was right below, but it has grown, it has climbed up the ladder, right? So we have seen the importance of AI and investments increase in the last 1 year by the enterprises in Thailand. So these are those areas where the investments may still flow. Now, When I go through the presentation today, in my further slides, I'll talk about three things, three stages of how potentially the conversations should run on the booth or probably with your customers. Thailand market is special. Enterprises, be it small and medium businesses or large enterprises, do not buy just because of the technology stack. They are worried about the return on investments. Will the investment I, as a technology buyer, doing today will give me the benefit? And hence, IDC suggests and recommends that your conversation should start with first the business trigger, or you may call it the business value of what is the benefit which you will achieve. Now, this benefit could be productivity increase, reducing risk, protecting your IP. I don't know, right? These are some examples, but it should always start with a business trigger. And then your technology framework should appear, and then the services around that technology framework. Because this gives confidence to the end user. This is the value I get. This is the way the technology will be implemented. And there is a partner who is there to help me. I'll keep on focusing on this in my further slides as well. Now, let's take up one of the themes of the 6 priorities which I showed earlier, and let's talk about AI. Remember, I promised AI will be called out more than what you called out for coffee today. I'm keeping to my promise. Now, in one of the enterprise surveys which IDC has done, and this is across the region, we asked large enterprises, the SMBs were not, the smaller enterprises were not involved. The question was, have you implemented AI solutions or agentic AI solutions in your enterprise? 3 out of 4 enterprises said yes. We have implemented these solutions in more than 2 places within our organization. Close to 30%, 28% of the enterprises mentioned that they have implemented it in at least one scenario within their enterprise. And close to 25% mentioned that they are thinking of doing a product, a POC, or a trial to see where productivity can improve. But these are not the points which you should focus upon. You should focus upon the last box, which says 0% of enterprises indicated that they are trying to do nothing. They are not worried about it. They are not doing anything. Everyone said that they are trying to do something and trying to implement Gen AI solutions or AI solutions into their environment. Now, this is something which creates a lot of worry for the partners based on my interaction with the partners, because we have been thinking about the AI opportunity and how does it trickle down to the booth level? How does it trickle down to the partner who sells energy solutions, right? And that is the message from this slide is very clear. There is an opportunity for every partner if we focus based on the use cases and if we start a story based on the use cases. So let's take a look. Again, IDC did a survey of small and medium enterprises. These results are not from the large enterprises. These are from the small and medium enterprises, primarily because I believe close to 40 to 45% of the overall IT market in Thailand is dominated by the SMB players. Huge market, and probably the partners sitting here, dealers, value-added resellers, will get majority of their business from the SMBs. The top 4 use cases are obviously the customer-facing chatbots, and the question which was asked to the small and medium enterprises was, which are those areas where you would want to invest money using AI solutions? So the chatbots, which helps in logging off leads, giving better services to the customers, this is an area where the investment would go in. Content creation, obviously for the marketing department, for the regular employees, it helps them do their job better, creating reports, financial department, which can help leverage these to generate reports faster. The third one, obviously, is digital assistance. It has come in a big way because it helps improve productivity. And I've seen these agents being deployed by the technology department itself to write code, to QC the code, do software testing, so on and so forth. And the fourth one is obviously the AI capabilities which have been embedded within the vendor built solution. So you'll have AI capability embedded within the CRM, the ERP solution. So you'll hear Salesforce or SAP embedding those agents within those solutions. So if you think about, these are the use cases where the investments are open, where small and medium businesses are trying to invest the money. But then for the partner community sitting here, how do you unlock those deals? And to answer this question, we asked enterprises, what are your priorities or your challenges in deploying AI? Remember, wherever there is a challenge to the enterprise, there is an opportunity for the partner community sitting here. Towards your left, you'll see that the first biggest challenge is getting an AI ready workforce ready, setting up AI infrastructure. And if you look at this, this translates into revenue map for the partners. Partners can think of setting up readiness workshops for your customers, where you can help them understand which are the use cases which can be deployed in your organization, what basic needs have to be done so that you can deploy those solutions. Infrastructure assessments, right? Compute, storage, servers. Do you have it enough, or do you still need it? Is your cooling enough? All of these can be done and packaged in an assessment, right? So these are your key areas, the top factors where your customers will be open to spending money. Now, the other one is selecting a technology partner, right? So trust in Thailand is a very important currency. All enterprises want to trust partner, and if you have a relationship of trust, things become easier. So there are a few steps which I think would definitely help you, but let's move ahead. Data management, readiness, network security, network build up for the AI agents come up as the next biggest challenge for these partners. And obviously, opportunities for the partners is on the lines of data cleanup, setting up governance, user enablement, ensuring that the adoption is happening, right? Now, if these are the areas where the investments could happen, because these are the priority areas, the other discussion which has been happening is whenever we talk about AI, the first thing we remember is GPUs and servers. But let me tell you, the overall AI opportunity is not just GPU and servers. And when we interview the end users, and when we ask them, what is your priority in terms of investing or in terms of procurement when you want to deploy AI solutions, the chart towards your right shows those priorities. So they want to invest in cloud security. They want to invest in energy resilient infrastructure. Supplier diversification, obviously they don't want to lock themselves with a vendor. Resilient connectivity, meaning networking and all those assets connected with networking, and managed cloud. Now, these are the priorities of the enterprises. So think of the middle inverted pyramid structure which I have shown, starting from the bottom. These are all the technologies which have to be deployed before anyone talks about AI. So you'll have to talk about power, you'll have to talk about cooling, you'll have to talk about networking. So the suggestion which IDC has for partners and channels is, do not think as selling AI as just selling a packaged solution. Treat AI as a journey for your enterprises, where they start identifying, is there power facilities enough to take on the load which will come through. I remember I was talking to a CIO and he gave me a very good analogy, and I believe it will work for each one of you here. He said, if I have enough money to buy a Formula One car with 1,000 horsepower engine, I cannot ride it on any road. I need to have good roads, good signaling, good lighting, good fuel if I have to run my Formula One car on the road. And that applies exactly for all the AI infrastructure which people are talking about. You just cannot have the top two layers. You cannot have agentic and GenAI applications and AI platform implemented into your enterprise's infrastructure if you do not have good cooling, if you do not have power, backup, disaster recovery, networking, security around the AI agents which have been built. And I believe this is a very good analogy for us folks to take it to your customer. The discussion is not just about GPUs, it's much more wider. And I believe this gives an opportunity for every member sitting here to talk about those discussions right from the bottom of the pyramid, which starts with power and cooling. Right? Now, I know that a lot of us sitting here will be focused on the devices piece of it, the device refresh, and your focus would also be on the resale of those devices or sale of those devices. So let me change my tact. Let me flip to the other piece of the motion here, where we'll talk about laptops and mobile phones. Now, we know that the consumer market is really struggling right now. But what you see on the screen is how, towards your left, how the desktops and notebook market is migrating from the regular PCs and laptops towards more AI-enabled PCs and laptops. So the first column towards the left of your chart, I'm not sure if this is big enough. I'm talking about this column. This is 2025. The blue one is non-AI laptops. And these numbers are all shipments by unit. The yellow one is GenAI, laptops capable of running GenAI. And the orange one is, the yellow one is normal AI. The orange one is GenAI. If you look at the orange one, it's 7%. And then it keeps on increasing. Look at the blue bar. It keeps on decreasing. In 2026, it's 52%. But look at 2027, 26%, 2028, 11%. What is happening here? In 2026, we don't see a lot of enterprises thinking about investing money in AI PCs, right? Very few. But what happens in 2027 and 2028? Suddenly, enterprises, and this is what IDC is forecasting, 2027-28 are the years where the volumes will hit for AI PCs. Now imagine, and this is what IDC is suggesting partners to do, get into conversations, the refresh cycle, which a lot of enterprises would be trying to do, get into discussions where you would introduce them to the AI PCs. Whether they buy it right now or not is not a problem. But the idea is that you position yourself as a trusted advisor with these enterprises today. Because when the time comes in 2027-28, you will still be the trusted advisor to whom these enterprises will come back and ask about what do we do with AI PCs, because that is what IDC's forecasts are telling us. 2027-28 is the time when these PCs will see, AI PCs will see good traction. Look at the yellow and the orange pieces in 2027-28. So when the volume hits, you are rightly positioned. Now, if you look at the smartphone market, the story is widely similar, but then smartphones are mostly consumer driven. So I will not delve down so much unless and until you have an offering of mobile device management solutions which you position to your customers. That is where the AI piece makes more sense for you to focus upon on the smartphone side. Else, the smartphone is mostly consumer driven. It has seen much more adoption of AI based mobile phones. Again, there are a lot of use cases, productivity, summarizing, image editing on the smartphone side, which is the right part of the screen. So smartphone is a very niche segment where the enterprises are supplying those phones to the enterprise. So I'll not go too much into the detail, but the baseline is the adoption is much more higher than laptops and PCs in the smartphone side. Now, let's talk about the Windows refresh cycle. Like I mentioned and I showed in my previous slide as well, that this is not a broad-based device boom. The volumes have kind of tapered down. It has become stable. But the message here is there are a lot of enterprises who still want guidance on how should they upgrade, how should they refresh their Windows 10 devices. Now, IDC's suggestion is do not just go for a plain vanilla device refresh. The device refresh cycle gives you a toehold in the door, right? But you need to have a managed attached services program going along with the device cycle. And I have a couple of suggestions for the audience here. But the idea is start helping those customers who are looking out for a device refresh. They may or may not decide to go up for the device refresh cycle right now, but at least you can offer them ESUs, which is again a paid managed attached program from Microsoft, which extends their time till they decide whether they would want to change their devices. So essentially, help them refresh, run an audit cycle for them, help them understand what is their exposure. Obviously, you can connect services, the endpoint services, so on and so forth. I'll discuss that a bit more in detail. But the idea is, once you go through the refresh cycle, always keep in mind to bundle a managed attached services along with it. Now, what IDC does is, and this is especially for the small and medium businesses across Thailand, when we run our survey, we ask participants, which are those technology areas where you would want to invest money in the next 12 months. Now, what I have done here is we have a large series of technologies clubbed under employee productivity, security, infrastructure, cloud, so on and so forth. But what I have done here is essentially clubbed some of those services together here so that you can offer them as a managed attached service along with your device refresh. Let's take a few examples. There are 3 here. The area in the slide is really less. I could have done 4 more, but I just brought out 3, but there might be many more, right? The first one which I could think was endpoint security services. Now think back to my slide where I was talking about which are those technology areas which enterprises wish to invest today. Security was top number 1. So offer endpoint security services as one of the managed attached services when you sell a device refresh cycle. Again, what is the value benefit? It reduces risk for the enterprises, and fear is the biggest selling factor. If the enterprise worry about the security of their network, they will invest money, right? So why does this sell? And what's the value add? It protects the network. And obviously you can have a lot of pieces there. You can have device management, endpoint protection, asset visibility, and patching, and identity and access management, so on and so forth. Now, the next piece, which was voted the highest by the enterprises, was the bucket of services which focus on backup, recovery, and continuity. Now, why backup, recovery, and continuity? The primary catch is everyone wants to protect their IP. No one wants to lose their precious data. So this sells well because it protects. Again, easier to budget. There is no abstract value to it. There is real value to protecting your data. So you can bundle endpoint backup recovery, disaster recovery planning, secure recovery, pitching cloud and hybrid solutions across to your customers. Now, obviously, the third one is the AI and related services, user adoption services across these devices. Now, why AI user adoption? Remember, in one of the gaps which I showed in one of my previous slides, the enterprises are worried about how should I adopt AI? What is the clear goal here? Which are those partners who will help them? So this package helps them. So you can offer behavior change assessments. So let's say you have deployed AI, whether employees are adopting those technologies. If they are not, then your money is wasted. So you can offer solutions where you can run workshops training these employees, building employee matrices where they can vote and see whether these technologies are being adopted by the employees. Copilot, and we had a session here we were talking about in the morning where people were talking about Copilot. All of these can be bundled into a managed refresh. Let me take a pause here. My throat is dry, right? I talk too much. Okay, what have we discussed till now? We have discussed about the priorities of the enterprises. We have discussed till now which technology areas will see budgets flowing in. We have discussed how can every booth category here, and when I say booth category, it means all the different types of technology vendors, have a say in selling and building a journey for these enterprises across their AI journey, right? We have seen all of this. But then a very important factor is which are those industries which are investing money, right? Which are those enterprises in which industry are investing money? So think of all of this which I have discussed and let's overlay it with what are the kind of industries which are investing money on these technologies in Thailand. Now, I'm from IDC and I love data. Data is the middle name of my company, International Data Corporation. So you will see a complicated slide here. Sorry, it refreshed a bit late. Let me explain the slide. To the bottom of the x-axis is share of IT spending. So which industry has the maximum share of IT spending in Thailand? And towards the y-axis, you have year-on-year growth for 2026. So on the x-axis, I'm measuring how big is an industry in terms of IT spending. On the y-axis, I'm measuring how fast this industry is growing, right? So you'll see bubbles. To your extreme right, you will see financial services, and financial services includes banking, insurance, capital markets. They are the biggest chunk. So imagine, whom should you target? BFSI is the first one who has the money to invest on technology. No brainer there. The second one is manufacturing, and I have broken manufacturing into multiple buckets. You'll see the green ones highlighted: high-tech, electronics, durable goods, non-durable goods, resources. And when I say resources, it means mining, so on and so forth. The manufacturing bucket is the biggest spender again. And then you have a whole bunch of industries, healthcare, retail, which are investing today to upgrade themselves and their technology stack. So the opportunity lies here. But where does the opportunity lie for the channel? That is what I wanted to discuss. Now, remember I was talking about the business value, the triggers which should come before. So when you interact with your prospects, the first thing which should come out is the industry trigger. In other words, the business value. So what is the business or the industry trigger for the finance sector? Now for finance, digital finance, virtual banks, these are seeing an upkick in Thailand. A lot of licenses have been released. All of these industries, or all of these virtual banks will definitely invest in cloud, disaster recovery, analytics, AI. So obviously, this leads to investment in technology. Now, when I say BFSI, just don't think of BFSI per se. I remember I was presenting this slide in one of the conferences, and one of the participants asked, I am a dealer. How does this slide make sense to me? One of the virtual banks is one of the largest bank. They will not come and talk to me. So this is useless for me. No, this is still useful for everyone here. When I say virtual banks, when I say digital finance expansion, that doesn't mean just virtual banks. It means the ripple effect which it creates in the ecosystem. So there will be smaller players who would feed those users back to the bank. Not everyone will be, savvy enough to use laptops and mobile phones, for example, to do their KYC, know your customer, regulations apply. So there will be sub vendors who would have to upgrade their technology stack, and that is where you can target them. The other example is the manufacturing sector. So Thailand is an emerging and established hub for EV production. So you have IoT, you have OT, IT, all of that playing. Again, just don't think of automotive companies. You have a whole ecosystem of vendors and sub-component suppliers, small, medium enterprises who have to build components for these industries. Their IT ecosystem has to be updated, and that is where lies the opportunity for channel players. Because they are upgrading, the vendors are upgrading, obviously their partners, their subsidiary and sub-component ones have to upgrade as well, and that is where the opportunity lies. For retail, I remember Thailand government has released a couple of notifications where the retailers have to now, if they want to survive, they have to have an omni-channel presence, meaning they need to have an online presence as well. They also need to have an offline presence. Now, building an offline presence needs investment in technology, because they will have to invest in technology to connect so that their data is synced. So you have opportunities on data analytics, CRM, ERP systems to be implemented. And in order to do that, you'll need a lot of infrastructure to be set up. So there is an opportunity there. Again, healthcare, obviously these are a bit of regulated industries. And when I say healthcare, I just don't mean government hospitals. They are slow in giving out deals because of the current situation. But talk about the private players who are still open in upgrading their infrastructure. A lot of data gets generated, and there are opportunities to build up and help them build their infrastructure. So now, again, let's take a pause. We've talked about the technology side. We have talked about the AI side, the use cases where they get deployed, and we have layered it off with the industry where there is a definite pull based on IDC's research. Now, let's also dig down further as to what's happening when we layer all of this up with the size of industries, size of your customer. And let's focus on the small and medium businesses, because I believe that gives a bigger opportunity for the audience today. Now, for the small and medium businesses, and I have a colleague who tracks the small and medium industry, and her focus is SMB, SMB, SMB across Asia Pacific. And I'm putting her quote here. She says, for the SMB sector, lesser the complexity, the better it is for them. You bring them a whole pamphlet of solutions, and the enterprise CIO from SMB will fall from their chair. They don't know what to do with this. Lesser the complexity, the better are your chances to get that approved. Now, and that's the reason better packaging makes more sense. So when we did the small and medium businesses survey across Asia Pacific and including Thailand, we asked a question to these participants. What are the kind of services are you willing to invest in for the next 12 months? And what I have done is I have kind of clubbed together those services so that there are logical bundles around these services. Now, the first bundle is the secure productivity starter bundle. And by any means, I do not say that these are the only 3 bundles. I was limited by the space on my slide, and hence the top 3 bundles. Now, why secure productivity starter? Any enterprise which is trying to do a device refresh would want to improve their efficiency, productivity as well in a secure way. Remember, the survey data which I have been pointing to point in the same direction. Security is one of the primary concerns. Productivity is one of the concerns because that is what these enterprises are trying to adopt, those Gen AI applications, right? Because they want to improve productivity, content, generating content, so on and so forth. So what is that package that helps them do this? So you offer device plus endpoint security, device management, and collaboration all bundled as one. When I say collaboration, it means your Teams, your Slack, so on and so forth. I'm from IDC, so I'm vendor neutral. I cannot take names. Sorry, I did not say that. Vendor neutral. So Teams, device, endpoint security, device management, collaboration. You position it as secure productivity starter. Now, the second pack is targeted towards those small and medium enterprises who are raring to grow. Right now, they have a certain level capacity of data analytics, but they are raring to grow. They want to grow to the next stage. So your offer could be your growth stack package. You talk about CRM, you talk about analytics, cloud, and backup. Now, why does this help? This helps those enterprises which are doing a device refresh, but your second managed attach is your growth stack. Again, these are the services, these are the technology areas where enterprises have mentioned that they would love to invest because they want to keep their lights on. The third one is hybrid cloud and continuity piece, which is typically targeted towards those accounts which are focused more on security, privacy, control. Think about those government accounts, local governments, judiciary, defense. Those are the accounts who would want or who would have budgets to invest in these services: infrastructure, disaster recovery, managed operations, managed services, so on and so forth. So what have we done today? I know I have been speaking for almost an hour now and my clock keeps running. We have looked at the technology segments where enterprises are still ready, those pockets where the enterprises are still ready to invest. And we know that Thailand market is not a boom market. It's not growing very fast because of the GDP, because of a lot of things. But there are pockets of opportunities. We discussed those pockets of opportunities in AI and how the entire audience here has and can participate. We discussed about packages and bundles, which makes more sense for those enterprises because they have budgets to invest there. We topped it up with a filter of enterprises or the industries which are ready to spend money, and we again slashed that entire stuff by feedbacks which are coming in from the small and medium business enterprises. What are they willing to do? What are the kind of services they are willing to invest? So let me close today with five practical moves which I think we have discussed in today's presentation. Think back of my slides initially where I mentioned these are the areas, these are the gaps where IDC research finds that enterprises need help. That is your entry point. That becomes your trigger to start your discussions. So always start with a use case, a business trigger, and a sector-wise trigger, a business outcome. Always start with that because value sells more. Technology infra framework sells less. So start with a use case. Attach services early, not as an afterthought. Bundle it together in the first proposal itself because as per IDC's survey, the enterprises worry, how will I leverage this? How will I deploy this? Who is the partner who will help me make this run? That is where attaching services early makes more sense. So they are confident that they will be a partner who will help me deploy all of these technology elements which I will put money into. For the accounts which matter, which factor trust more, obviously you have private, hybrid cloud, so on and so forth. The other piece which I missed telling you was take help from your distributor. Think about financing. If you're talking about device refresh and your account comes and tells you, hey, it's a bomb you're charging me, think about device as a service offering where the overall bill amount becomes a monthly billable amount. And there are a lot of vendors who have started their device as a service offering. So think about creative financing where you can unlock refresh and obviously build recurring revenue engines. So if I have to conclude my presentation today with one theme, that theme is the opportunity for channels today in 2026 lie at the intersection of AI, infrastructure, and recurring services. When all three of these mix together, there is an opportunity for the channel piece. And I hope after my today's presentation, you would agree that when I say AI, it's not just the GPU servers or the models. It's much more deeper. Thank you so much. And I hope my today's presentation will help you take data-backed decision for your planning in 2026. Thank you.
Thank you.